Good morning, friends. Yeah, here we are again. Before going into analysis, there is something that I think I should teach us that you must know. It is very important because it forms a basis of you making a decision and how to deploy to understand that making money here or in this business, there are points that you must note, and not until you note those points, your style of trading will not shift. And when you begin to understand that, you will know where and when you must deploy to trading, and at what point you just need to watch and see how structure unfolds. You've heard me talk about wave, Elliott wave. You've heard me talk about structure. Now, what do we have in front of us? The Elliott wave talked about the motive wave and the corrective wave pattern, and how the corrective wave pattern can get complex. And when it gets complex, you can have a double two or a double three when it gets complex. But a simple Elliott wave is that where you see this one as the first wave, this in the middle has a second wave, this as a third wave, this as a fourth wave, and this is the last wave. And then we have this one coming down. This, imagine, whatever you are seeing here is not only interpreted, or is not what alone you will just focus on the higher time frame, like say the monthly time frame. The way you will see this structure on the monthly is the same way you're going to deploy it on the weekly, the daily, the 4-hourly, the 1-hourly. I don't expect you to begin to do analysis less than 1 hour. It's going to get confused. You're going to get confused and everything will be muddled up because of the simple this lower time frame makes a whole lot of noise. You won't be able to see things. But the way you work yourself is you try to work from the higher time frame to the lower time frame. So when you get a clear perspective on the higher time frame, then you scale it down to the lower time frame, let's say the 1 hour time frame, then you get to understand how this thing works and how to deploy, what direction you are or not. Now, wave 1 is a structure. Wave 2 is a structure. Wave 3 is a structure. If I may label it, wave 1, and wave 2. These are things that you know, but I just want for you to see it in another light, that you ought to see it for you to make good progress. You don't just trade at every opportunity that you think you see. You must be able to answer questions when you are seeing structures. The thing is that structures can get modified, it can change. But when it changes, the simple question is that, okay, what have they done? You ask yourself, what have they done? So if you're able to answer that simple question, this is what they have done, and this is what exactly they are doing, or what does it appear as if they are doing, is at that point, that you now say, okay, you are in control or you understand. You cannot control what they do, but you are in control of you making a decision when you know this is what they have done. When something changes, you know it's likely to change here or there. Now, this is wave 1, which is structure 1. And this is wave 2, which is structure 2. And this is wave 3, which is structure 3. And this is wave 4, which is structure 4. And the last structure, wave 5. When trade is within a structure and it has not changed, then you don't tell yourself you are changing direction. When it has not changed, you don't tell yourself you are changing direction. You must understand structural change and what decision you are going to take. Just like every good trader knows that in a corrective pattern like this, fourth wave and the second wave, they will tell you, don't trade wave B because you don't know what wave B is going to give you. They will tell you because wave B is not what you want to trade. And not until you begin to apply to understand, you not understand the reason why they say, oh, don't trade wave B. Now, each of these waves in any time frame is also subdivided into, like wave 1 would always be subdivided into 3 or 5 motive waves, like you see 1, 2, 3, 4, 5. So that's why I said that whatever this structure that you are seeing, this is the structure you will see on the higher time frame, like monthly, weekly, even the 1 hour time frame. You scale it down, you will still see you count your structure like this. But when you are in a corrective pattern, then you begin to look at structure in 3 waves. And I will still get there. In 3 waves, for instance, if you are looking at structure in 3 waves, if this one has given you this wave here, and this is the first part of the correction, which is A, the structure of wave 1 has not been broken. The structure of wave 1 would only be broken and something will give if what you are seeing here, because most of the time you don't even know if it's wave 1 structure or not. Orientation is key. The limit of wave 2 is 85. That is where I have it. In red, that's the limit of wave 2. Because like a retracement to the downside of 85.4 is the limit of wave 2. So once that structure is not broken, you are still within the limit of what wave 2 can give you. That's what we are trying to say. So once that structure is not broken, you cannot be thinking of something else. That is what we are saying. The structure of wave 2 must be broken before you can say that, oh, maybe this is something else that you are looking at. Breakout structure, that is what I'm teaching us to know this is the next thing that the price is going to do. Now, when you have the first move to the downside like this, which is A, just permit me to label A and a B and a C. By the time you get this concept, you have a clearer picture. Now, in this, the only thing we know that is sure of the corrective, because I'm done with wave 1, which is 5 waves, always 5 waves. Of all these, the wave 2 and wave 3, the only thing that we know is that C wave is always 5 waves. C wave is always 5 waves. So that means this will be 5 waves, and this also C here will be 5 waves, because this is A, B, and a C as well. I want you to listen and understand this. C is always 5 waves. That means from B to C is always 5 waves, and this is always 5 waves. Now, having understanding, with that understanding, B also is always 3 waves. B is always 3 waves. C is always 5 waves. B is always 3 waves. Not X. X is another thing entirely. Then A can be either 3 or 5. A can be either 3 or 5 waves. B is always 3 waves, and C is always 5 waves. Now, when you have a correction D that didn't break the structure of 2, because you must know, oh, where is the structure of 2? The structure of 2 is at 85.4. And when a price is correcting A, you don't actually know where the price is going to get to. And as a matter of fact, you don't want to trade it. Wave 1 ended itself. Where wave A is going to end, you don't know. The only thing that can give you an idea of where wave A might be terminating is if you understand the internal structure of that wave, if it's doing a 5 wave or if it's doing a 3 waves. And you must now know, okay, within that wave, probably it did this, probably it did this, probably it did that. On that time frame, and this one gave you like a 3 waves, which is another A, B, and a C. So with this leg and this leg, you may be able to tell this is where most likely it's going to terminate. But oftentimes it might not even, it might be truncated or go beyond what you think is going to get to. But often, most of the times, if you do your analysis on, higher time frame, you might be able to really get things clearly. Wave C is one of the waves that you can bank on to trade. Wave C is one of the trades you can bank on to trade, and from there you can also try to trade the other leg. You can attempt to trade the other leg. And I will explain myself. This one coming down to this point to form A, and I'll be doing something for you to really understand some things now. Oh no, I don't want to do that. I just want to clone that and change these. Now, this is the limit of the correction of A. When you have this as a limit of the correction of A, and this is going up as a correction of B, there are things you must know that wave B, not until you get to the limit of wave B, the structure will not change. Now, what is the structure of B when this is like A to you? What is the structure of B? B can be anything. It can be 50, which is in the middle. The structure is still not broken. It can be 90, which is air. And at this point, you know, between 50 and 85 is still structure of B, in case it's going to be a zigzag. To 90 is still structure of B, in case it's going to be a regular flat. And at 123, as structure of B, in case it's going to be either a running flat or an extended flat. At what point do you think the structure of B will be broken? And at a retracement of more than 1.618. So what I mean is that this is the origin of A. This line here is the origin of A, and the A terminated here. What are the limits? The limits of A, the upper of B, the higher limits of B that you expect a change of structure will be at 1.618, which is here. .618 must be breached, which is there. So, and 123, it's here. One, two, three extension is at that place. So when you have price moving to form B here, between here and here, B can still go on. Structure won't change. It has not changed. Structure has not changed. So assuming this price wants to break structure, then once you have this, up here, then the structure has been broken here. You can't think of wave B again. So you must always be looking for, has the structure been broken or not? You must always be looking for that. So this is where the structure of B is going to be broken, but it's not broken. And you have a cursor to a move to the downside. Then when you look for price action, at this point, you can be aiming at 100, extension of this, or 123 if the price is within 123 and 161.8, most of the time it's going to get an extended flat of 123 to the downside. Otherwise, at 123, you should be expecting at least 100 to the downside. So, and how do we measure extension of B to C? This is how we do it. You start from the origin of B, which is different. You take it to the end of B. So your extension of B should be actually here. Should actually be here, which is at this end here. This is where it should be. So that's where it should be. So that's where C should terminate. If you want to do the mission, so you know that your C will get to that point. Now, when you are trading also, you have to have in at the back of your mind that your brokers with their own charges and all of that. So you don't want at exactly here, you can just go like about 5 or 10 pips above to take your TP. And when you are now looking for your entry to go long, that is the area you are going to plant your entry also. And as you are doing that, you are also following this to count a 5-wave structure. You know, you have to count it like a 5-wave that is doing a 5-wave structure. You are counting a 5-wave structure here. You are counting a 5-wave structure as it's going. You must count, look at the internal structure also to see that it's aligning, you know, with like a 5-wave structure, because it's C. If it's not a 5-wave structure, then maybe it's not what you think. It must be a 5-wave structure. And when you are counting also the 5-wave structure, you must also be having at the back of your mind that as you are having this structure, is any structure being broken in the middle of the correction? You must always know that. Is it being broken in the middle of the correction? This is 1, and this is 2, and this is 3, this is 4, and this is 5. You must know that structure must not be broken. So at the lower time frame, you can even know when something is going to happen. You can know. And that's why I'm teaching us what is a structure. What is the structure of 1? We know. What is the structure of wave 2? We know. What is the structure of wave 3? We know. And what is the structure of wave 4? You must know. And what is the structure of wave 5? We must know. So, and at this point, if you have this one going, this leg after C can be anything. This leg, they can decide to have a complex. This is a 3. They can decide to have a double 3. If they're going to have a double 3, so what we are saying is that they want to have a WXY and not a simple ABC. So if they're going to have a WXY, the whole of this ABC becomes a W. And the move here must be an X. Now, because it's an X, what is the structure of X? You must know that the structure of X is always less than 85.4. It can be anything below 85.4, the structure of an X, which means that if they are going to still do a retracement of C back up, will be at this exact level of price where A is. This is where 85.85 is giving me now. So I can now turn that to red. So if I'm going to have an X, X should not go beyond here before price, you know, makes it back down, because I want to correct, do a more complex correction. And once I have price go down again, it's telling me that when price is going down again, you must have also some things at the back of your mind. If price is going down again, you allow A to finish. You don't want to trade A because you don't know if it's A or not, or it's just a pullback. It's very important that you know all of these things, because that's when you now say, okay, oh, there is consolidation. And once it goes down, the thing is that if it should break the structure of C, once 85 of 1 is not taken and it's still allowed, it's telling you that it's correcting the more. You must be able to count the kind of wave that is doing also to know that, oh, this has not finished itself. So X, like I said, should not go beyond this place. In case you want to have beyond this place, in case you want to have a complex correction. So you must know that. But once price should go beyond the limit of 85, then most likely it's not X that you are seeing. Most likely it's not X that you are seeing. So you must look at your structure very well, and you must now be, trying to see that once this is taken, because a retracement of C to 85, this is it. And most of the time, when you see this, a retracement of C, because this is your wave C, this is where 85 is. This is where 123 is. And that is the way prices will be moving gradually to break structure. When structure of one is broken, it's broken again. You have these A and B and C, and the structure is getting broken also at this level of 123, because it's going to be now be 123 to this wave here. And you are breaking 161.8 above here, like it did, then you know it's another structure. So another structure in this case is wave 3. So once we are done with wave 3, because wave 3 is going to break the structure, another thing that you can do to know that wave 3 is actually going to break structure is we tell ourselves that in case you want to trade consolidation and you're not sure if it's consolidation or not, this is the simple things that you are told to do. You lay it across here. And this is another thing that will tell you that the structure is being broken, because if structure is going to move beyond this wedge and it breaks above this and this, is telling you that they are out of consolidation and the price is making higher highs. These are examples of things that you can do because you use a whole lot of what you know to understand what structure. So the point of break of structure, what do I do when I'm anticipating it? Is very important. What do I do when I'm anticipating it? In some clear, if they have taught you something before now, when you don't know that C is going to come and you don't know what way we are doing, what they will teach you is that, oh, you connect the first move to this. That is what anybody first will teach you. Let me now use that in red. I'm going to take it out again. So in red, they say, oh, this is what you do. Then the first move and the first correction of A, then you take it out to this place. You are watching for this channel, a break out of this. That's the first thing they will tell you to do. But then again, because of your knowledge that you know that if it's a corrective format, it must give you a third wave, you won't be quick to have drawn your channel, because once the channel it breaks the red, you think is a downtrend. It's not a downtrend. So that is why you must wait before you draw a channel. You must have a 2 return before you draw a channel. That will be a correct way to draw your channels. 2 return first. The first return, which is A, the second return, which is B. Most of the time you can trade C. So once you get that, this is a return, this is a return. So the lowest of the return, you connect the two like this. You take to the height of 1, which can force This one can fall a bit below it, but most of the time, it can also go above it in case you are having, okay, if it has gone above it, then you would have probably taken this one to meet this anyway. So, and you now watch for a structural break. So within your channel, if you have a price break above, then you know that that has changed. The consolidation is it's off. It's not on again. Now, I'm teaching us so many things, which is very important that you are going to apply anytime you are doing a live trading. So the structure of wave 2 has been broken here at this point. It has broken, it's broken above, and it's not likely going to be a complex correction because this also is out of the table. X is off. We're not going to have a deeper correction. We're not going to have a deeper correction. So it's just A, B, C, and it's not WXY anymore. Now, you now move. So what confirms this as wave 3 is that it should be more than 161.8 extension. So from your beginning of 1 to the end of 1, which is in red, to where you have your C. And this is 161.8 is here at this level, which the price had broken already at this level. This is the level here that indicates a broken 161.8. That's the level there. So 161.8 was broken at that level. So that's the break, and it's wave 3. So then you have to wait for the inner structure of wave 3 because it's going to run in 5 waves as well. It's the longest, and running 5 waves is also funny. So you must know that. Now, when you are at the summit of wave 3, then you want to do a wave 4. The structure of wave 4 is from 2 to 3. Once it does not extend more than 40 or 38.2, then you know it's wave 4. Then how do you do that? A retracement from 2, which is C here. You come to this level, then you know that it can get here. So because it's above it, the structure of 4 is not broken. So you don't expect that price is going to change direction. And even if you take it to the height here, which is this height of B here, you only expect the structure of to be broken once this last line that I now put it in red, once price goes beyond and below it, that structure is broken. So that structure will be broken. So when you are getting to the climax of all these and you are thinking you are getting to the end of wave, you must be looking at what is the structure that you expect here. And I did teach us something because after you have, we do A of 4, a B of 4, and a C of 4, which has run in like a running flat in this case. We have an extended flat here. I just used that to, in this case, you have A, B going above the origin of A, do you understand? And C falling short. That's a running flat structure that you see here. And when you are doing your running flat or your extended flat, if this one is extended beyond 123, it doesn't really have to fall on. Once it's not more than 161.8, it could be a bit short. Do you understand? It's still, you still regard it as an extended flat. So you're not looking for that figure. It can be at 1.4 something. It's still an extended flat. Yeah. So you must know that not exactly at that figure. So now you have an A. This one goes up. It might not be exactly at 123. So, but at least it's going up. So once it doesn't go beyond 161.8 again, you know, that's still the structure of B. One does not take 161.8. Once 161.8 is taken, then and it's broke by even like as you can see a week above here, then you know that that structure is broken. By a week, a simple week, the structure is broken. So don't wait for anything. They are giving you a lead, and you are still thinking that it's just a lead for you to hesitate. When it breaks like that and you are within a structure, just know that the price is still going back up. So you must know that once a week breaks your structure, you are looking for an exit almost immediately. You are not praying that the thing is changing. It's not changing any direction. They are telling you that we are breaking structure and you are thinking that they are changing direction. They are not changing any direction. The price is still going to go up. So now, at this point, it came down here. Now, in trying to find 5 from 3 to 4, you must know something because, like I taught us, this thing never got to the end of 4 because the end of 4 should be at 38, which is here. So if you want to do an extension of this is where 4 from B, which is the highest, down to the lowest, and you do this, you will think that this is where 161.8, that price may fall anytime from price, and price is breaking above. You must know that you must go to the limit of where you think 4 should be, which is this red that I showed us the other time. And when you take it, that you must know that the price can still get to this point. Oftentimes, we don't expect price to break 161.8 if it's with 5. So, which is exactly where we have it now. So we must understand how structure runs. Now, of course, 5 also will run in 5 waves and all of that. Some people might even take this one as the first of 5, second of 5, and the 5. 5 can just go as a simple, you know, like what they call it, like an impulse. You know, it can just go like an impulse, and it will end there, and they will change direction. Now, the structure of 5, at what point is it broken? You can see the price coming down and completely erased with 5. Then the structure of 5 is broken. So when you see that the structure of price is broken, they are doing a bigger correction to correct the entire wave here. That is the meaning of that. They are correcting the entire wave here as one wave. They are correcting the entire wave as one wave. And they are likely going to do an ABC, because after the first 5 waves, they're going to do an ABC. And this might be A B, A C, and they turn up the more. So that is what we expect. And that is one thing you must understand. You don't expect that, this is going to come down when it has gone up and as an impulse, you know, and it's going to break down again, except if you have not looked at the higher time frame. That is when this one will now come down because you have missed something and break this. They're going to do an ABC after a 5 wave, an ABC, which should not go beyond, most of the time, 50 to 61.8 retracement. 50 to 61.8 retracement. And when you are doing a retracement and you want to count this retracement, you take it like this, from this, which is 0 to, from 100 to 0 here. So your correction now for price to turn further up will now be most of the time between, let me use this blue. Now, most of the time between here, which is 61.8, at least a 50. Of course, it can go as deep as 76. in kind, if it's going to be like a wave 2 on that time frame, because the whole of this one can now be a wave 1, on a bigger time frame. The 1, 2, 3, 4, 5 can be a wave 1 on a bigger time frame, and this one can come down as a wave 2 on this time frame, and it's an ABC on that time frame. So, and it will still be within wave 2 purview once it does not take this, which is 85.4, and which is here. Which is air, which is at that place. So price returning, it must not go beyond that for that ABC correction. You don't watch this, not this one, because it will be 90 here if you are talking of what you are seeing here. So it's the entire run that you're going to look at, and it's going to run in 3-wave format. Running it in the 3-wave format may now be something like this. And when this one also is correcting B, you must understand that B also should not break 85. It can go deep, but it should not break 85 if it's a correction. And this one can go more down to form a C. In that situation, you now say A, B, C. And this A can be 3-wave, it can be 5-wave, and this one will always be 3-wave, and this always will be 5-wave. So we must know that. Now, with that said, in terms of structure breaking and all of that, so let's now go to our analysis. With that said, let's now take our analysis of what the trade has done. So this is where we are. Nothing has changed. Nothing has changed. That's where we are. Nothing has changed. So now, this is the 1, 2, 3, 4, and 5, which is the first correction of A, because now we've been selling. So this is a correction of A here. Now, and one more thing, if I go on the monthly time frame, one more thing on the monthly time frame, I want us to see something on the monthly time frame so that we understand what most likely we are seeing. And good. So on the monthly time frame, this is what most likely we are seeing on the monthly time frame so that we understand. This is like 1 and a 2. This is like 1. Let me use black. Oh my God. It's going to bring all of these things. Okay, let me just explain. So this is like 1. This is like a 2. And when you do your 1, and this is a 2 on the monthly time frame, this is A, B, and a C. A, B, and a C. And this is a running flat here. You can see A is deep, B overshoots it, and this one runs flat below it. So that's a running flat that it did on a bigger time frame. So, and we now begin to do your wave 3, which is 1 and a 2 of wave 3, and 3 of wave 3 here, and a 4, the fourth of wave 3, and it ended it here, because it's going to first go down to do wave 4 and wave 5, a bigger 4, to correct this one. Then you now have wave 3 has ended here. You now have wave 4, A, B, and a C of wave 4. A, B, and a C, also forming a running flat here for A and a B and a C here. Now, after that, we are turning down within this wave 1. So of the last wave, which is 5, that's the way it's appearing now. Wave 1 of the last wave, which is 5. We are within wave 5. So wave 5 now, I see it also running like a 5-wave structure. That is what it's looking like. You know, this one, wave 3, ran like this: 1, 3, 3, 1, a 3, 2, a 3, 3, a 3, 4, a 3, 5. You can see a 3, 1, a 3, 2. No, sorry. Yes. Okay, a 3, 1, a 3, 2, a 3, 3, a 4, and a 5. Then we now have 4 proper: A, B, C. So we're going to have a 5, 1. So this is looking like a 5, 2. That's what I'm saying. So it's looking at a 5, 2, and I'm going to do a 5, 3, a 5, 4, a 5, 5, before we now have a very big ABC again that might break all of this to the upside. So this still is like the 5th wave, but it's going to run on that higher cycle, a 5, 1, a 5, 2. So that is why we're calling this to be an A, B of a C of wave 2 to correct the entire move here. We should not go beyond 85 points. At least it could get to 50, 60, 76, 80, not more than 85 of the entire correction here. That is what we are saying. So when you now have this at the back of your mind, you can probably begin to see the higher time frame corrections that and what we are expecting on the higher time frame as per the movement of price. So what we are saying is that now, let me take it where it's clean. Okay, let me still use that as well. Okay, let me tell you what I'm saying here. Now, what I'm saying here is this. What I'm saying here is this. So if we see this as the origin here, or the beginning of this wave here, which is wave 5, one of 5, that's the origin. It has formed 1, 2, 3, 4, 5 to finish it, and which is the end of it here. That is what we are proposing. That is what we are calling. That's what I'm saying. So it means that this correcting the entire run, if it's wave 2 of that 5, now the retracement of it, we are expecting that retracement. It has it gotten to 50 already? No, it hasn't. It hasn't. Okay, it has. It has gone beyond. This is it here, because 50 is here. Price already broke, 50. So what we are expecting is that we should not go beyond here. Even if price gets to this point, we are still not changing trend. So that's why. So the last place that price should get to is that place, because this is wave 2, then we expect most of the time between 50, 61.8 and 76. That is where we should expect that things should run to. So our blue zone would now be between these two. But again, so that would be our blue zone between those two for 2 to get to after correcting. So, but not beyond here. So now with this, we can understand when price is moving up, we now know what price is trying to do, that we should expect that price should begin to go bearish around this zone. We should expect price to go more bearish around that zone. So that is what we are saying. Now we've corrected, we are doing an ABC. So this is an A, we have done an A of that correction. So we have done an A of the correction here. B is what we are doing to go to C. So once we've done that A, B, sorry, this is an A. So we now want to do of this correction A, B, C. Then we now do a C of this to get into here and turn down to continue with 3. And that wave 3 is going to be more massive than this entire wave that we are seeing here. So that is what we are saying. Now, with that said, let's now go back to where I'm teaching. I need to do this for us to understand what price is doing. So this is a monthly chart. And so we know eventually where we are going and where we are expecting. We're not going to break. So once we don't break here, then, you know, we are going to turmoil down at that level. So this is weekly, this is monthly. So we can see that this is A and this is wave B, that we are in the middle of it now. So on the weekly time frame, so you can see that this is wave A, which ran in 5 waves. And once C is done, we can only make this one a zigzag to the upside, you know, because that is going to run deep. So a zigzag will run deep. So we should be expecting to pick the low of this entire correction here. So once we have a B and a C run down, we are going to pick the low to do at least as much as, how many pips did we do here? So as much as about 1,500 pips again. So which we must be ready when it's ready. So, but we are taking our time. You know, it's good to truly study a pair, understand a pair, and, you know, you make most of your money once you understand it perfectly. So now let's go to the daily and see what we are seeing now. This is a correction of B. So A is done, and like we said, we are doing a B. So on this time frame, yes, this is where it's getting interesting on this time frame now. So we are doing a B. You must now understand what structure. If you like, you may call this one a 3-wave pattern, which is A, B, and a C. But actually, it is 5-wave. It ran in 5-wave and in a very sardonic, if I may use that word, a very sad and very wicked 5 waves. But you can count 5 waves really. So, but if I go inside of the 4-hourly, then you will see it much better. So this is 4-hourly. Let me try and, yes. So from here, this is what we have done to run over 500 pips to the downside. Now, this one had run, this is wave 1 of it. And when you are doing a correction like this, you know, this is where it gets complex, that you might not even do more than this wave 2. You know, I did that in the last video, that in case you are picking something, you don't want to know the limit of 4, you can use this 2 here, which is the first 2, which is here, because the way it went down so sharp here. Now, this one is the second wave, and we said this is the 3rd wave. And inside of the 3rd wave here, which is wave 3. So we can say this is A of wave 1, wave 4, a B, and a C. And after this A, B, C, then we ran down as sharp as that. And I told us that it can be like that. So this is where wave 5 ended. And because it went down here, we were saying that this might just be the beginning of the correction. You must know that. And a structure was broken here by this. At first, you might be thinking that, oh, this is 1 of 5. But because they decided to truncate this by doing this didn't go beyond, just a little beyond wave 3. Because that's one thing you must know. If they decide to truncate something, it didn't go below, because you might be expecting that if this is 4 and 4 did A, B, C here, then you might be thinking that, oh, the 5th wave still have in an impulsive wave can be between 125, 1.25 to 1.168 extension. But because it's a corrective wave format, that is where they do a lot of truncation at times. They will truncate and things and, do all of that. So we add this, but where you don't know, if you don't know, you don't know. But then if you think that this is 5-1, then if it's 5-1, this structure must not be broken for 5-2, and it broke it for 5-2. So because this thing now broke this structure for 5-2, then you know that this is wave B. That's just it. This is wave B that they are doing. So they are finished with A here. If I may bring my drawings, they finished with A here, which I'd explained here. 1, 2, 3, 4, and the 5 with A at finish here, and they are doing a with B. And we said also that in trying to correct with B, just like I did explain shortly, that we don't want to go beyond 85 here. Then we expect correction oftentimes between 50, 61.8, not more than 76 at times, because it's in a corrective format. You don't really see that it's going to push up like that before it goes down again. We are aiming at also doing a 50% correction of the entire run of wave A of that bigger cycle that I talked about. Bigger cycle in the black that I talked about, this wave A. This wave A. This is wave A here, this wave A. So we are trying to do a 50. This is where we are still aiming, Let me go back to 4 hours. So now, and this is one thing that you must know, that this is a break of structure for what you think is 5, which ended this one. It's a break of structure. Once you even get to 85 here, if you had wanted to do this from that top down to where it ended, 85 actually is here. '85 really is at this level. It's at that level. So once you have a break at that, you must know, because this is the way they start at times. They start as if they are correcting. All of a sudden, they just throw big candle at this wave 3, and they ended it here. And this now ends A of the first correction here. So of that correction inside correction. So it ended it there. So this is where they have ended it up here. So that has ended there. And this is where understanding is also very important. This is where your understanding is also very important. Now, We are saying that this is A, and we thought that a B will also do a 50 or a 60. Why would you think that? It can be anything. It can be anything. Now, when you don't understand structure and you are looking at candle and all you are trying to read, oh, this is an engulfing candle. See the way they came down. Boo, 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 boo. That means this can now be, oh, they are now moving down again. And this is like, it's going to be a 2. Me, I'm not saying that because I'm looking at the structure. The structure is what I'm counting. I'm counting structure. And I have finished with A. And this is A of the correction that has broken this. I know they are correcting now. So I still expect a C to come. That is what I'm saying. Now, with that said, for me, before this structure of A can be broken, this is what will break it for me. And I say, okay, oh, they are no more, they have changed it. They have not changed to correct B. For me, just like I taught us, when I come from the low of A to the end of A here, the low of A is where this blue is. Which is then this green now. Let me take this out. Now, this is A in blue. We want to see B in blue. Unfortunately, B in blue didn't give us the middle to go more up. It didn't give us like, oh, let me come to the middle and give us. So it didn't give us something like, oh, what you expect in a zigzag that should stall at, let's say, 85 before it turns more up. It didn't give us that. It went down. So, and it got to like 1.11. No, just even shy of that, just a bit above 100 extension here, and it's going up. So if it's doing that to me, what I will expect is at least if it has given me something like, let me use this. If it has given me something like 1, 2, 3 here, which is still good for B, I just taught us. And the limit of B would have been this, which it would be crazy to expect that in a correction. Now, in a correction, so if it has come here, it will still be, it can still be a running flat or an extended flat. If it has come here, the only thing it can be is an extended flat. So it still wouldn't have ruled out the possibility of a correction of a B. So this wave, even though it came down so sharp, it could still have been a wave what? A wave B at this level and at this level, and it will run a C higher up. So now, but the way it's going for me, we need to finish a C. That is what I'm saying. For me, we need to finish a C. I'm not looking at candle alone. I'm looking at structure because structure will prevail against whatever candle you are seeing. See the way you saw this candle is structure. They threw a big candle down here, but it's structure. They broke the structure. And you are still thinking, oh, it's an engulfing, whatever, they are going more than no. They did correction and they broke it up. It's structure. The structure has been broken here. This, they threw big candle again down, but they didn't break the structure of A or what B should have given me. A B limit should have been around this area. If they have broken this one to the downside, then I won't be thinking of possibility of a C. I will now take this one as probably an X, where this will now become, instead of A in the red, it will now become W in the red, X in the red, and a Y, WXY. That's what I will now regard it to. But now it's still giving me that possibility of an A, a B, and a C, and not WXY. It's giving me an A here and possibility of giving me a B here. That's what it's still giving me, because this structure didn't break this to the downside. So I still see this one running up as a C. Now the catch here is that still it could be because it extended a little below the origin of A in the blue. So the B in the blue extended below it. If it has gone beyond 123 to this work between here, I'll be thinking of an extension, which is an extended flat. But because it just ran a bit below here, it can still be, a running flat. So the running flat is what is still possible here. And I don't want to think more than a running flat. A running flat also can give you an extension of 123, So which means that if it's now a running flat, and I'm thinking of a running flat, now my black let me use my black. My black comes here at the edge of this wave here. So that is where I'll now be thinking of what kind of extension because to me, we are still going to break the top here. That's, to me, we're still going to break the top there. So, and what I see here, it's more like from here now. Let's see what we've done so far. From the black. So we are broken 50, we are broken 61.8, and price then react there. So we are still going up. So this is 70. So now, if I may look at all of this, yeah. So this is 76. That's 76. And that is 85. So I think price is going to break all of that. That is what I think. Price is going to break all of that. And where we shouldn't go beyond is price is going to break all of this. This is the limit of where I expect price now. Maybe here. That's where I expect price now. That is, I expect my seed to be here at least. Anything, once we break this with the top, then I should be expecting that price may fall. And when it's going to fall, then we are now coming down to be probably first correcting, then begin to move down. So I still expect that price is going to still climb up from the present current, whatever high. We still have about 100 to 138 pips to the upside. That is what I think. Price may do that. But the best thing you can now begin to do is to count the internal structure. Because these are taking 61.8 to the upside. That's the way price is going to be going. So if you want to do a running flat at 61, you would have done that, but it's likely going to break the top once more, and before the price goes down. So if you see that, you'll be confused because you don't understand the structure, and the price after this impulse, and you now see it breaking the top again, then you are confused. No, it's not about impulse, it's not about anything, it's about structure that you are seeing. So we have worked it down from the higher time frame to this. I've taken a good time this early in the morning to teach us this. So you need to watch this and over to understand the concept of wave format and correction. So if I want to go inside 1 hour for you to see, so that is what and how things can change. That is how things can change. You must understand how structure, can change a bit, like the way it changed here for wave 5 to end here. And when you know that 5 is not still going to run in wave 2, it broke the structure here completely. It broke the structure of what you think is 5 here. It broke it completely, and it did this, and it should be an A. And a B also didn't break the structure of this entire run, So, and it's going up, and I think it's going to break the structure to the upside. And when they now do that, they are completed. They have formed your C, and the price will be coming more down. So in this kind of situation, you don't expect that, from origin of A to the end of A is going to be equal from this origin of B to the end of C will be equal to A will be equal to C. No, you don't expect that in this kind of situation because of what they are trying to do. So let's go inside of 1 hour and tell us what we are seeing here. Now, inside of 1 hour, for me, this look more like a wave 1 and a wave 2. And a wave 1 and a wave 2. So if this is going to run if it's going to run a 5 wave, because I expect C to run 5 wave anyway. I expect C to run in 5 waves. If it's going to run in 5 waves, then let's label. We are almost getting to the end of this teaching. So this for me is where 1. Okay, 1 has ended here. 1, 2, 3, 4. So I don't want to do more than that. So let me preempt price. This is a 1 and a 2. We're in the middle of trying to do a 3. A 3. So the attempt to do this, so I believe B has ended there. In an attempt to do that, let's use that. For the limit of 2 here, for the height of 1, now, so for us, after 1, we have an A, a B, and a C, and we are going higher up. We are going higher up. So this one round of, it's 5 waves really to finish here. It's 5 waves. It's 5 waves to finish there. So this one ran as an A and a B and a C, like a running flag. So that's wave 2. And we are seeing the internal architecture of wave 3 now. So what do we do to actually understand this one better? Because once you break out of the channel, then you must know that it is not a sideways correction or a consolidation anymore. So the only thing you can do is to do this, draw from here to this limit here. So let's draw that. When we draw this, then you clone to bring it to the height of 1. Use the height of 1. So which we are seeing reactions like twice now at that height. This is the first reaction that sent the price down. This may have occurred at 61.8. And this again, price is trying to make, is going to break it. And when it breaks it, it's going to probably break it to the upside, you know, then to correct at that at the break of it, it's going to now correct 4 or 3 and all of that. So it's warming up to break. So it's going to break it. That is what I'm saying now. So the price is tending towards the upper quarter of the channel here. So lifting, you know, dragging and lifting below and not filling the space here. So once that happens, price is going to come back in to the channel, then be trending at the lower edge of the channel, telling you that they are trying to change and finish up that wave. So for me, this one is going up, and this is 1 and 2. So where do I at least expect 3 before I say, oh, I've done 3? I should expect an extension from this black to the height of 1 to the low of 2. I'm expecting at least 3 to get to this level before a possible correction of wave 4. Price will not get here, will not stop until it gets to this level of a possible, of course, it could break that level. It could break that level. But once it breaks that level, it makes it a wave 3. If price should get to that level, it already makes it a wave 3 for me. So we are within how many pips to wave 3? We are within within 50, 60 pips to wave 3 to make it a wave 3. And by the time price gets to that one, in terms of retracement, of the O move from here, that should have even broken 85, which is here. Should have broken 90 to the upside, which is there. Then you should now know that once the price gets here, as your wave 3, it's still going to break to the upside. So that is what we are looking at. We are looking at this running a 5-wave structure. And once you get to 3 and you did a 4th correction, you should be expecting a change of pattern at the break of wave 3. So what we need to see what wave 3 is going to give us and how we now begin to now look for between 3 and 4, the limit of 4, to know where we are going to pick our entry. So I think and I believe the way it's going this week, we should be finishing this with C, and maybe by Wednesday, between Wednesday and Friday, we should be turning down. That's what I can see here. I've done a whole lot to teach us about structure, and I'm going to end this video, you know, very soon. So once we finish C, we are turning down. We are going to break this. It's looking more like we are going to break this, you know, and for me, let's pay attention. Once we have a break of the channel to the upside, temporarily, we are going to 3 to finish 3 and back to 4 and 5. And where are we trying to get to? So the point we are trying to get to, like I said, it's around this area. So once price breaks this and break up any moment from here, between here and here, we should be looking for price to turn down. So that's what I think. Price should be turning down like 60 pips or so above the top, we should be getting a reaction for the price. At least that will be, this is 50% of the retracement of the entire retracement from up to down. That's 50%, and this will be like a 61.8. So still between 50 and 61.8, that is where we should expect a reaction of C to the downside. So having said that, I wish us a good luck next week. Thank you.